The global financial landscape of May 2026 has entered a phase of controlled madness. While traditional safe haven assets typically move in predictable cycles, silver has decoupled from reality. For decades, silver existed in the immense shadow of gold, often dismissed as the poor man's gold. However, in the current fiscal year, it has emerged as a central protagonist in a high-stakes drama of astronomical growth and systemic risk. This phenomenon, characterized by a violent V-shaped recovery following previous stagnation, a process now dubbed yamoization, has seen silver prices explode with intraday jumps exceeding 30%. This is no longer mere market fluctuation. It is a structural revolution of the most volatile kind. Part 1. The dual anatomy of the surge. The 2026 silver boom is not the result of a single economic trigger, but rather a toxic cocktail of long-term industrial necessity and acute geopolitical terror. 1. The industrial renaissance and the chasm of supply. Silver's primary strength lies in its physical properties as the planet's superior electrical conductor. In the mid-2020s, the green energy revolution reached a fever pitch. Photovoltaic cells, the heart of global solar initiatives, have consumed silver paste at rates that current mining capacities simply cannot sustain. Simultaneously, the electric vehicle boom has fundamentally altered the demand curve. Unlike internal combustion engines, EVs rely on intricate electrical grids and battery connections that require significantly higher silver loads per unit. Because the timeline for bringing a new silver mine online spans 10 to 15 years, the market has transitioned from a chronic deficit to a structural chasm. 2. Geopolitical arson, the Middle Eastern vortex. If industrial demand is the fuel, then the geopolitics of 2026 are the spark. The Middle East has entered a vortex of instability. Reports of Iran's nuclear threshold crossing, combined with the formal alliance of the UAE, Israel, and the United States, have created a climate of immediate war panic. With credible intelligence suggesting imminent strikes on global financial hubs like Dubai and Abu Dhabi, capital is fleeing paper assets in a frantic search for tangible value. 3. The velocity of tokenization. The 2026 surge is further amplified by the tokenization of commodities. Through on-chain blockchain technology, retail investors and algorithmic high-frequency traders can now enter and exit silver positions with zero friction. This has created a speculative velocity that decouples the price of silver from its physical reality, turning the market into a self-sustaining loop of momentum chasing. Part 2. The bull trap and the mechanics of deception. Despite the euphoric narrative of infinite growth, a forensic analysis of the current price action reveals all the hallmarks of a historic bull trap. A bull trap is a predatory market dynamic designed to lure the late majority, emotional retail investors, into the market at the absolute peak. This surge provides the necessary liquidity for smart money, large institutional funds, to exit their positions at maximum profit. As these institutional players sell their holdings to the FOMO-driven masses, the market loses its underlying support, leading to an inevitable implosion. The implosion catalysts: tripwires for 2026. We project that the silver bubble will reach its terminal phase within the next 4 to 8 weeks. Several tripwires could trigger the descent. Geopolitical de-escalation. If a back-channel diplomatic solution emerges between Iran and the UAE, the war premium on silver will vanish instantly. Industrial demand destruction. High prices are currently forcing solar and EV manufacturers to halt production, which will eventually collapse the very demand that fueled the rise. The dollar bull spike. In a systemic crisis, global capital often abandons even precious metals to seek the ultimate liquidity of the US dollar, leading to an inverted correlation that would crush silver prices. Conclusion: the vertical cliff. As we stand in mid-2026, the silver market is suspended at a vertical peak. Parabolic curves in financial history do not bend, they break. History teaches us that the more violent the ascent, the more total and devastating the subsequent collapse. For the uneducated investor, the current mad surge looks like a golden opportunity. For the seasoned analyst, it is a warning of an approaching waterfall. We anticipate a historic market correction where silver may shed 30 to 50% of its value in a matter of weeks, leaving those who bought at the peak holding an illiquid asset in a landscape of red candles. The cliff edge is no longer a distant threat, it is moments away. What do you think? Let me know. Subscribe, there will be a new review on the channel soon.